to Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. Today's episode features a look at Deloitte's Digital Banking Maturity 2020 report, the fourth edition of the largest global benchmarking of digital retail banking channels, answering what leaders are doing to win in the digitalization race. It is providing a comprehensive outside and mystery shopper assessment of retail banks' digital channels and furthering discussion about future developments. The Deloitte team looked at a total of 318 banks from 39 countries to arrive at an assessment of digital functionalities, customer needs research, and a user experience evaluation. And now, please welcome Michael Wodzicki, partner at Deloitte Consulting.
Good morning, Michael. How are you?
Good morning. Thank you. Very good. Very nice to be here.
It's actually, coincidentally, the second day in a row that we do a podcast with somebody who's in Poland. So it wasn't intentional, but some very interesting developments in the country with the financial sector and the tech sector both, I think. So becoming a bit of a hotbed for digital development in Europe.
Yes, I think there's a couple things happening in Poland. One, the banking sector is very competitive. So it's a mix of strong local players and a lot of foreigners from European countries, Holland, Germany, France, Austria, Italy, Spain, Scandinavia. So a lot of the European plus some more distant players like Citibank, which has quite big operations. And that mix together of competitiveness drives innovation, especially in the retail area. And then the second thing we see strongly developing in Poland specifically is the whole nearshoring. So this is a huge business now, employs over 200,000 people, basically doing quite sophisticated operations for Western European and North American banks. So you have a big community of people doing back office work. But I would add more higher value add back office work around compliance, around risk, around certain parts of operations that are basically stationed here. So we see these two things which are driving the market.
I saw a presentation from Bank Polski just recently, which is a very old, well-established bank, but they're doing some amazing things in the digital space. So it almost feels like what they're doing is more like a neobank and not like a 100-plus-year-old bank. And I don't have a high view of the traditional German banks. They've been battered over the last decade. It seems like somebody like Bank Polski, they have managed that transition much, much better.
Yeah, it's an interesting case. It is an old bank, so been around hundreds of years. Was very traditional, very branch-based, paper-based stamps that have confirmed whatever transactions. And for a long time, everyone had essentially written them off. But I think, like with any organization that goes through a transformation, there was a recognition at the top that the world is changing and that they need to change as a result. And they started about 20 years ago to take very seriously digital and digital channels, and the fact that more and more customers, should I say, don't want to have to go to the branch for everything that they do. And this was also, as I said earlier, driven by competitors that they had, which were also pushing this direction. So as a result, it gained momentum. They saw results and it paid off economically for them, as we know. So they saw that it was a lot cheaper to serve customers in these other methods. So it just kind of was a snowball effect. And as a result, now they're in a good position, a very good position, very strong financial results. But I would still say that there are competitors on the market which are more nimble, maybe have a better UX than they do. But then those guys are smaller, much smaller.
Got it. Thank you. Digital banking, of course, is a very hot topic across Asia with digital banking licenses in Singapore, in Hong Kong, and in Taiwan. And so the reason that we're here today is that Deloitte has published a digital banking benchmarking study. That's what we want to talk about today. I found it interesting for two reasons. One, obviously, having a global organization taking a very holistic approach, but then also the whole digital banking discussion very often, lots of soft factors in there and opinions. And with the study also trying to quantify this and substantiate it with data. And it's a much more meaningful discussion when you actually can compare data points on specific vectors. So to start with, maybe explain, please, a bit about what the study is? It's been the fourth year, I think, that it's been run, and the scope and the approach to this study, if you don't mind.
So correct. It's the fourth time we're running it, and we run it every 2 years. And this year, it indeed went global. It started actually in Poland, and then we expanded the second time around to Europe, and then we went semi-global the third time, and this time we went really global with the report. So we have 39 countries involved, 318 banks globally. And the report went through over 1,100 different functionalities, which are accessible in what we call 3 channels. So one in the mobile channel, and then 2 in the internet channel. So one, which is the channel which is publicly available information, and then the third channel online would be when someone logs into an account, what kind of functionalities and information is available. We did it through kind of expert mystery shoppers. So people who were trained went through specific paths and went and checked those 1,100 functionalities across the full customer experience. So starting with, kind of what's information is available publicly, then actually opening account, checking all the different features available, cross-sell, beyond banking type functionalities, and then till account closing. And then the second piece of the study was actually a UX view. So this was some of the feedback that we got in the past. And we then collected a team that would check 30 specific scenarios in the banks and made an assessment for how easy it was to navigate and how fluid it was to navigate those 30 key steps. So we basically come out with these double assessment functionalities and UX.
And so what were the headline findings of that study?
Let me start with, we had the kind of the pleasure or the luck that we did the study during COVID. Let me just address the first thing that we noticed so we could then see, what did banks do as a result of COVID. And it was actually very surprising to see that they did a lot. COVID really acted as an accelerator for digital improvements, digital development. We noticed that 60% of the banks globally somehow restricted their physical presence, physical network, either closing branches outright or strongly reducing opening hours or forcing people, if they want to go to a branch physically, they need to set up an appointment. So that was kind of an immediate thing that we saw. And then they supplemented that with some digital functionalities. One was that they instantly, 40% of the banks increased the limit on contactless payments. So basically allowing customers to more fluidly move away from cash. Kind of remarkably, a third of the banks, or 34%, suddenly implemented fully digital processes, which before they didn't do. So just in a very rapid time, a lot of developments and things they were still working on, they were able to force through and deliver to customers in a very short period of time. And then there were a lot of other functionalities which banks added, like making appointments online for the branches and things like this. And past COVID, I think that first of all, banks have moved away from the kind of bread and butter. Most banks globally have figured out how to open an account remotely, how to do the fundamentals, of course, of checking balances, of doing transfers, of maybe simple credits, cash loans, which are needed. And that's basically expected by customers. What we are seeing now banks focusing on is areas around much deeper cross-sell of products, around bank assurance, around different complementary investment products, credit products. That's one area. And then also this second area is focusing on things beyond banking. What else can be done when you have a client already accessing your accounts? And this is, I think, an interesting development and very diverse geographically. It's not like something that works in Singapore will work elsewhere. So we see very specific things which banks are doing to expand the relationship. And essentially what they're doing is they're leveraging the trust and the security that clients have by entering an application. And once the organization, so the bank knows that that is you, and that's essentially confirmed because they have to do that. And right, and if you can transfer money out of your account, then obviously they need to make sure that system is robust. It kind of opens the avenue for different ways of interacting. And one interesting development we see, for instance, as an example, is the governments are saying, okay, well, if you're accessing the government for certain services, You can actually, in certain countries, do that via your bank account so that the government knows that that's you. So this area of competitiveness, which we see is moving towards these sorts of services. And then the open question is how to monetize those types of services. And banks obviously are thinking about that, but they're also patient that they say, look, if we can get more share of time and more trust, first of all, have a much loyal customer, and then over time, we'll worry about exactly how we think about monetizing that relationship. And just one statistic I do see is that globally, the amount of time customers are spending with banks is growing. So if you think of all the things that distract us, take away from our time, our daily time, of course, Netflix and the internet and obviously personal life, and we have work. So there's many forces fighting for our attention now, more than probably ever in history. And banks are increasing their share of time that they take from us. It's a very good news for the banking sector.
That's surprising, actually, and especially depends on how you measure it, but in the context of the pandemic, where you're saving yourself the trip to the bank branch. If you spend more time online, that even makes up beyond the time that you also spend on the trip. That is quite an interesting statistic.
Yeah, but if you think about yourself, people often are looking at their bank account. It's so easy to access your balance, check if your paycheck came in, how's my investment doing? And then, like I said earlier, if all these beyond banking and other types of services, if they're also available via your bank account, then that accumulates to more time. And then, of course, there's services like buying parking tickets, buying metro tickets, which can be easily done through your app.
Now, so from the perspective of the industry, there is this declaration and award for the world's best bank, the world's best digital bank. And for the last 2 years or so, that's been DBS in Singapore. Is that something you could confirm from your study, or what's the characteristics of the top 10 banks that come out of your study at the end?
Actually, we don't announce the rankings officially. We inform the individual bank when we talk to them where they are. And I would just say that even the best banks have still a lot that they could improve and learn from their competitors on the local market, but also taking inspiration from how things are developing elsewhere in the world. So no matter who you are, there's interesting things going on and gaps which we see. I can comment on countries, so where we see most innovation and advancement. And it's not what many would expect, but it's quite consistent over the last 3-4 times that we've run the global survey, which, by the way, is the largest digital banking survey. And those countries are Turkey, Spain, Belgium, Poland, and Singapore. But there's many different reasons why these specific countries are driving innovation. What we said earlier, it has to do with the local fierce competition, which we see on those individual markets. And this just basically competition drives innovation.
That even the leaders have room for improvement. One number I saw in that summary presentation was that even the digital champions, 50% or so, have an online onboarding function. And some of that might be in certain jurisdiction, legislative, regulatory causation. But having champions, and every second of these champions doesn't even allow you to open a bank account on the mobile or online. There's still a big gap.
Yeah, exactly. It is surprising. You'd think that opening an account remotely with today's technology is completely possible. And I would argue that there, yes, probably are some regulators still out there which are, for some reason, forcing customers to have a face-to-face interview. But again, with the capability of scanning ID cards, then taking selfies that automatically measure and see whether we're actually dealing with the same person. Also using third parties for verification of couriers to verify someone's wet signature, video conferencing capabilities, and so forth. So there's so many now ways which globally banks have figured out how to do KYC in a very reliable way. It is surprising that still 40% of even the champions don't do that. One thing I wanted to comment was, because you did ask earlier around what trends we see, and it's probably obvious, but I just wanted to mention it, that certainly mobile first is clearly where we see the investment, the development that's been happening over the last 2 years since the last survey. So internet is still important in many jurisdictions, in many countries. but there is some stagnation in its development. And I think when we talk to our clients, their strategy is design and develop everything for the mobile and then adapt that to the internet.
The top five that you mentioned are relatively steady, as you explained. In this rank, it's always interesting who's the fast mover, who is coming up, even if it's in the lower regions, but countries that moved up, let's say like 10 positions or something. Is there anything visible?
To be honest, no. I would have to measure it over a longer period of time. No, there's the answer. I think what may be surprising is, some countries which are laggards, which we wouldn't necessarily expect to be laggards. And one kind of standout is the US, which, leads obviously in many areas of technology, but here seems to not be a leader or a benchmark really for anyone. But on the other hand, the US has shown that in many cases to be a laggard and then suddenly catch up very quickly. So I think that'll be an interesting market to observe.
It's even a good data point to say that you can't really jump the line. So you need to put in the hard work of digitalization, and there's no shortcut. It's like if you don't get started today, you just push it out into the future.
Exactly. So it is a long path. We talked about the Given Bank earlier. It's something, this journey, when we see the leaders, it was something they started 20 years ago, which sounds like a long time, but I mean, the internet's been around for at least 25 years. And so the trends were there, and someone just had to have an inkling of a vision of how the future could develop and basically react on it. And so, to build the position where they are, especially, of course, when we're talking about incumbents and larger banks, they had to start at least 20 years ago to get where they are now.
So one of the challenges I might throw at you is this lipstick on a pig question. I mean, you're very broad in your study and saying we've got 1,000 functions that these expert shoppers try out. But if I was very clever in how I present my digital image to you, you really only see the outside of my bank. And internally, the processes could be all still very crappy and legacy. Would you detect that in any way, or can you augment this from your deep industry experience with some color commentary?
Yeah, so just one clarification too. When we looked at the different functionalities, there was a weighting done of different functionalities. So not everything was weighted exactly the same. Let me answer it in a different way. That what we certainly found is that those banks which were digitally advanced, so these what we call digital champions, the top 10% of the banks, financially performed better than the rest. And specifically, they had a 2% better return on equity, ROE, on average, and a 4% lower cost to income ratio. So I think it seems also obvious and something we would expect, but it's nice to have it confirmed in the numbers that it pays to be digital and it pays as an organization to invest in this area, and you actually see return on investment from it. I would argue that both of these things need to happen. And in other words, the front and back office need to both reform and become digital. And in fact, many organizations, in a way, ban the use of front and back office. They say there is no front and back office, it's all the same. It's one office, it's end to end, and how, in the past called back office, how it works influences the front office, so we can't ignore it. And I think these leaders can't get away with putting lipstick on the pig. You need to go through the whole process in order to make sure it works efficiently. And why I say that additionally is that an important element is change, right? And changing the functionalities, adding functionalities in a very rapid way. And if you have a great front end initially, but a really bad back end, how do you then change when you've got that back end? So you basically can't. So that's why you need to make sure that the whole process is done and eliminate this notion of front and back office.
When the financial outperformance is a clear indication that it's not just on the surface, there's some deeper change that has taken place. DBS a couple of years ago published some statements on their comparison between the digital approach and the traditional. On a standalone basis, the difference was amazing. The cost-income ratio, 20 percentage points lower on digital, and ROE was 9 percentage points higher, if I recall that correctly. And of course, then it gets merged into this whole entity, and you end up maybe with the smaller percentages that you have quoted, but it also shows the direction of travel. And so in that context, and we mentioned COVID at the beginning as well, if you take out all the cost of the physical equipment, bank branches, ATMs, you go cashless, you go completely digital, isn't there like a tremendous opportunity to change that cost-income ratio, even without much additional revenue, which you also said the leaders are cross-selling much better and have a higher conversion rate there. But simply by taking out that physical cost, there's so much headroom for these banks to become financially healthier.
A couple points. One, what we definitely see on many markets is a differentiation in pricing based on customers' use of channels. So essentially saying, dear customer, if you want the luxury of going to a branch and meeting with a physical person, that's fine, but you have to pay for it. And that's definitely a trend that we see over, especially the last few years, and then some banks have been doing that for longer. And then the second, of course, is reducing the opportunity to have these physical interactions. So basically, very rapid decline in number of branches, I think, across all markets that we see. The question you're asking is, so where does that end? At what point will there no longer be physical branches? I think it's a great question. It'll take a little bit of time because what we certainly find is that certain products, there is extremely low still demand in it being fully digital. And specifically, I'll just say mortgages is one. Customers don't expect it to be digital. It's the most important buying decision we as humans make, so buying our home. And it is a physical thing, of course, that we're buying. And the fact that I take the most important financial decision of my life, i.e. taking a mortgage against my home, that I actually might meet with someone doesn't seem like a burden to people. So what we do see is that very, very few banks anywhere in the world, even in the most advanced countries, have fully digitalized this process. And when they do, they don't actually see much impact from it. Then there's other products around bank assurance, life insurance, health insurance, which also we see some physical interaction as being maybe normal. We're going to go that route of less and less branches. That's just clear, and it's been happening over the last 10 years. But there's probably a limit to how far it'll go. And then one element I want to add, though, that what we will see, and that's really been accelerated with COVID, is the idea of a remote advisor. Before, where we had to go and meet someone in the branch, nowadays setting up an online appointment with that person and having this mortgage discussion, having this life insurance discussion, having this investment discussion with him or her will and can and will be happening more and more remotely. And this, I think, has some very interesting consequences. By the way, that will touch not only retail banking, but corporate banking as well. So this remote RM model will affect, I think, even more probably and more directly and faster corporate banking. The interesting implication on banks is how do you organize yourself for that? And kind of there's two solutions that we see. One is you kind of have a dispersed RM model, so i.e. the RMs sit in many different geographies, locations, and communicate with the customer in that way, or a centralized RM model, remote RM model, where you put together these relationship managers in kind of like what a call center type place, and they all go to their desk, sit at their screens. And there we see both of those models developing with both their pluses and minuses. Encouraging for incumbents was actually that they're not doing that badly. It wasn't that the FinTechs, the new guys on the block with better architecture of IT, newer systems, were able to actually dominate. And actually, when we look at the best banks, it is names like you mentioned, DBS, BBVA in Spain, and others, which are very old, staid institutions who have also been able to innovate quite well. So I think we'll see a very healthy competition. What the banks have basically learned and seen how technology has made others in different sectors irrelevant, And I think banks have been resolute in saying, no, we understand that threat. So we're going to fight back. But also, I think I would more describe it as cooperate. And what we see in many, many markets is actually a strong cooperation with different fintechs to provide services. And this would be another piece of where we see development going forward, is just more and more and more cooperation with varied entities. But from the bank's perspective, that they're the key owner of that relationship, and you integrate with them, with the bank, in order to provide those services. Again, I think that's a win for the customer, for sure. Yeah, I think it's a win-win for everyone, as long as there's competition and choice.
I need to ask you one question to round it out, because I've got some friends who would be otherwise very upset with me, and that is China.
Okay, so actually the study, we didn't take China into consideration. That was one of the market that we didn't look at. In general, I think Asia is fascinating in how it's developed. I had a great opportunity the last 2 years to work a lot throughout Southeast Asia. And first of all, each market is completely different from each other, right? So there's not kind of a broad stroke you can talk about the market. What I've observed is a couple things. One is, in many of the markets, I'm thinking around Malaysia, Thailand, to a certain extent, Singapore, Vietnam, where I also worked, where they kind of skipped the internet. So this idea of mobile first is for them obvious that it's, why would I even say anything about it? So even there are banks which don't have really an internet presence, but everything went to the mobile phone. China specifically is a very, very unique country in the world, and how it developed in financial services. And it's fascinating, but it's not something that is directly relevant for other markets. And I'll explain why. So you have in China traditional banks, look very similar to banks like they are in everywhere else in the world, in Russia and Europe and US, wherever. They're just kind of these traditional banks. As I understand how it worked, is these traditional banks were serving a good part of the population, 100 million, 150 million people. But then there was a whole billion people that weren't being served by banks. And these traditional banks didn't have the operating model to serve that other billion that should have bank accounts. So how do you go out and serve this huge population that in a very rapid time needs to become bankable? These traditional banks weren't really interested in serving these customers because their infrastructure just couldn't support the weight of suddenly hundreds of millions of customers coming to their branches. It was impossible. So really the only solution was they had to go digital, and they had to go and develop a business model on how in an extremely rapid way serve whatever the number is, 500, 600 million customers. And it worked. And it turns out that they could do it. And now you have these huge financial institutions serving this segment of the population. What happened there in China is not something you can't look at other markets and say it was a very unique situation. A huge economy, rapidly growing, with the question, how do we suddenly bank 600 million people, whatever the number is? Where else is that going to happen? It's not going to happen in the US. It's not going to happen anywhere else because they're in just a different stage of their development. We can look at it as not Chinese, be impressed by it. I think there's certain things we can learn from it, but it's not something that I think we'll repeat anywhere else. I think what's very interesting would be what happens with those traditional banks, the ones that were serving this 100 million initially. And then I think another element which I'd be always interested in is whether the Chinese banks can play any role outside of China. Will they have access? Will countries allow them in? And if so, then what role and what value can they add? And of course, they do have currently presence in different regions, but it's more just to serve Chinese companies and facilitate trade.
Such a fascinating topic. If we pick region by region or country by country and certain examples, I think we can keep this going for hours. But in the interest of time, I really appreciate you sharing the study. We'll include the link to the summary document, which is definitely worth reading for the methodology and for the insights that come out at the summary level, for sure. So our listeners will have access to that. And if you are in the banking space and you're one of the banks that is likely to be surveyed, you can always obviously contact your Deloitte partner in that respective geography. There's an abundance of data that is behind that obviously from a benchmarking perspective can provide very good insights for further consultation.
That's correct. Or feel free to reach out to me directly. But for individual banks, this study goes into much more detail around individual performance. I think it's extremely revealing for those institutions to see how they perform and what they can learn from it to refine how they're going to be going forward.
Super. Wonderful. Thank you very much again, Michael. That was a great conversation. Loved your insight.
Thank you, Norbert.
Wishing you all the best.
Take care. I wish you all the best as well. Stay healthy, everyone.